the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
Hello, welcome back to Bank Talk. I'm Rich Carty, your host today, sales executive with Remedy Consulting. Today's episode will be joined by Ahan Sakar, general manager of Helix by Q2, and he'll dive into some things going on in his world. Hopefully you enjoy it. Here we go. Hi, Ahan. How are you?
I'm doing well, man. How you doing?
No complaints. So why don't you tell us a little bit what we got going on today? Tell us a little bit about you so the audience knows, and then maybe we'll talk a little bit more in depth with what's going on with Q2.
Yeah, sure. My name is Ahan, as you mentioned. I lead our Helix business, which is our cloud-native core and also our banking-as-a-service platform. If you've never heard of us, we were one of the first banking-as-a-service providers back in 2017. And today we're one of the largest. We have north of 15 million accounts on the system, and we support the likes of Credit Karma, Betterment, Acorns, Gusto, Rocket Money on the banking-as-a-service side. And then we support financial institutions like Sallie Mae Bank and BKC, as well as credit unions like America's Christian Credit Union on the FI side. And so we kind of sit at this interesting intersection between the banking-as-a-service world and the cloud core transformation world. So excited to dive into it.
Awesome. And how long have you been doing that?
I actually have been part of the banking-as-a-service business since we started it back in 2017. So this will be coming on my 8th year.
Awesome. Good for you.
Thanks, man. It's been a wild ride, I'll tell you. It's not that often that you get to see something from when people look at you like you're crazy for talking to them about it, to the point where it's kind of assumed that you offer it and you're having to explain how different situations are different with different technology providers.
Sure. And I think a little bit of our legwork, we talked a little bit about embedded finance as a trend in banking. If you want to maybe first define embedded finance for us and how it might apply to our audience.
Yeah, for sure. It's funny. Back when we started this business in 2017, I remember looking on Google for banking as a service, and there were no hits for banking as a service. And so we're like, you know what, let's use this term. And pretty quickly, we saw that we weren't the only ones thinking that. We saw a few other players start to use banking as a service. And between 2017 and call it 2019, 2020, you saw the proliferation of this broader phrase. And then around 2020, people started to realize, hold on, this business model where a fintech partners with a bank to go and launch banking services can apply to a bunch of other stuff. It can apply to lending. It can apply to insurance. It can apply to kind of all of these services that have historically lived inside of financial institutions. And so banking as a service expanded to embedded finance, or rather, companies partnering with financial institutions to embed financial functionality inside of their existing applications. And so today, I think that's what embedded finance is. It's the conjoining of these two worlds, the world of technology companies and the world of financial institutions, to help bring financial services inside of new contexts and new applications they've never seen.
Interesting. Okay, awesome. And as the trend, like you mentioned, it's the growth and popularity. What are some of the strategies of banks adopting this?
Yeah, it's almost interesting to look at it as eras, right? When we started, you can go even further back than 2017 with folks like Simple and then subsequently Chime, with long-standing bank of records like Bancorp and Sutton Bank, who've been in this space for a while. But in the very beginning, when folks were trying to enter the banking as a service space, not too much was known about it. And typically smaller banks were entering the space, and they were trying to find fintechs to partner with to help grow their deposits. Well, then we went through a little bit of this Cambrian explosion in 2019, 2020, 2021, 2022, where suddenly a whole bunch of banks hit the scene trying to enter banking as a service, signing up with infrastructure providers or fintech providers. And then what a lot of people refer to as the fintech winter came in 2023 and 2024. And what really happened during that winter? Well, one, there was a push towards profitability, right? The markets in general were no longer underwriting growth at all costs, and you needed to be more profitable than your peers, and your business needed to be profitable. Two, as banking as a service has started to mature, there was rightfully a lot more regulatory scrutiny. Regulators saw, hold on, tens of millions of customers are using these products. How do we make sure that the people who are powering them are doing so responsibly? And what this culminated in is, one, some insolvency risk, where some of the partners that banks had partnered with ran out of business as their business was no longer profitable. Two, a compression of economics, such that you weren't getting free money just by putting banking as a service in your title. And three, a focus on risk, operations, operating model, and compliance. Because folks started to realize you need to do this responsibly, and it needs to be a serious business if you're going to enter the space. So, where does that get us to now? Well, today in 2025, what's interesting is we are actually still seeing banks looking at banking as a service as a really great way to leverage some of their competitive advantages and to drive lower cost deposits. But the big difference is today banks aren't looking at it as an easy button, right? Today banks realize that if you're going to do banking as a service, you need to be focused and it needs to be a strategic priority for your institution. And so, coming to your question, how are banks looking at this today? Well, there's a crop of folks that were, let's say, the top 20 banks in banking as a service that are double or tripling down, right? They know that this has been wildly successful for them. And really, they're focused on how do I get an infrastructure provider that I can trust to be my foundation for the next 10 years of this business? And then how do I select different fintech partners that I know are going to grow? Because at the end of the day, I'm going to make my money and my deposits by scaled customers, not the number of customers. So there's that cohort. But if you are a new bank that's looking to enter banking as a service, chances are you fit into one of two categories. Either you are a smaller bank, so a sub-Durbin bank, meaning under $10 billion in assets, or you are a larger bank who has seen what a lot of different smaller banks have been able to do in the space, and you're starting to wonder how you can get your piece of the pie. If you are a smaller non-Durbin bank, I hate to break it to you, you're not going to be the first one on the scene, right? You're not going to be the first one to offer banking as a service, but there is still ample opportunity for you. And so what we have seen from banks under 10 billion in assets is specialization. I'll give you an example. There are tons of new opportunities popping up every day as technology companies see banking as a service and realize there are new opportunities for their underlying business. But some of those businesses have different risk profiles, or they have different idiosyncratic factors that you need to be prepared to support. So let's take a specific example. International remittance, believe it or not, is a pretty fast growing area in banking as a service. A lot of these folks have been offering prepaid cards or other products to their to the folks that use their international remittance, and now they want to offer banking. But any banker is going to know that onboarding non-US citizens or handling fund flows that include international remittance is increased complexity and increased risk. So if you are a new bank of record looking to get into the space, but you set yourself up to be able to handle that type of risk from an operating and compliance perspective, you have a competitive advantage to go and win all those remittance companies, because somebody trying to offer standard banking as a service is probably not going to be ready to handle it. So the big lesson there is if you're under 10 billion in assets, having some form of specialization, be it risk specificity, be it operating discipline in specific areas, be it the ability to handle aspects of program management, those differentiators become really important for you to be successful. If you are bigger than 10 billion in deposits, chances are you're not super interested in launching card programs because you don't earn a ton of revenue, but you can probably leverage the distribution advantages you have and the rate and economic advantages you have to go out to folks looking to offer savings accounts or higher interest yielding accounts and to power those type of folks. So we've seen banks larger than 10 billion in assets sign up to be bank of records to help drive rate for these end fintechs and help drive those specialized account type products, and in so doing grow their deposit base. Does that answer your question?
Yeah, I think that's pretty good. Is there like a trigger point or something that's like for these FIs saying this is a good time for us to do this? Is there something maybe on the M&A side that says, oh, what are you seeing in that sense?
Yeah.
When people are ready
The
for
question, and I love that you also brought up the M&A point. The question for a lot of these FIs starts with, what are you trying to do? Are you trying to drive more deposits? Are you trying to drive fee income? Are you trying to cross-sell to your existing base of commercial customers or fintech customers? Like, where are you starting? And then based off of what you're trying to solve for, what are your available options and what are you good at? So let's just run through an example of this. Let's say that a bank comes to us and says, hey, I am really focused on in the next 3 years driving $250 million of deposits. That's my success metric. That's what I'm trying to do. I have a few options. I can go and buy a bank that's going to go drive those. I can launch a digital brand and try and go get those customers myself. Or I can try and do banking as a service, and I can partner with fintechs to go and acquire the deposits that way. Which one of those three you pick is going to be based off of your specific circumstances. Put differently, the first option of M&A is going to be the most expensive, guaranteed, and will also be the most guaranteed, right? You know that you're buying a bank with, let's say, $280 million of deposits, and that you'll likely be able to retain $250 million of that if you acquire them, and that you know exactly what that journey is going to look like, but you're going to have to fork up the cash to go and buy that company, and you're going to have to work through that conversion and migration. Option two, launching a digital brand, has the potential to innovate against your existing product base and allow you to bring in new, sticky, long-term depositors for your base. But you have to be willing to do the marketing. You have to be willing to identify that net new population, and you have to be willing for this to be a 3 to 5 year play for your bank. And so some banks, we have banks in the Q2 portfolio that in 12 months have driven more than $1 billion from a digital brand perspective, but not all banks have the appetite to go do that. And then for banking as a service, yes, you don't have to do the marketing, and yes, you don't have to do the end user product interactions. But what you do have to do is go manage a bunch of different white label partners, right? And do the operating and compliance and risk factors that sit beneath that. So while you're not investing from a front end perspective, you are investing in supporting that sort of distributed model. And so the question ultimately becomes, which of these plays are you going to be better at based off of what you're historically good at? So we've had banks who have been playing in the prepaid space that say, you know what? I know I need to drive new deposits, and I've already gotten good at working with these types of third parties. It's a pretty easy extension for me to now go into banking as a service. And we have other banks that say, we're actually really good at identifying a geographic and then creating marketing around them. We've just been focused on this space, and they choose to do a digital brand. So ultimately, it comes down to, what's the problem you're trying to solve? What are your paths to doing that? Where's your strategic advantage? And therein, how should you pick it?
Yeah. All right. And we're kicking off 2025 here. What are some of the trends we're seeing as we start the year?
We'll be right back.
Is your technology spend getting a little out of hand? Are you worried about making those big strategic moves because of those hefty vendor contracts? Or maybe you just feel like your technology is currently holding you back. In today's banking world, overspending on technology is a risk you just can't take. Going up against those major vendors on your own can be tough, expensive, and especially when the contracts are designed to benefit them. That's where Remedy can come in. Remedy Consulting helps our clients stay competitive and grow their business with the right technology, products, and their spending strategies. Not a Remedy client yet? Head on over to remedyconsult.net for a free review of your tech stack, spending, and contract terms. Even if you're not the perfect fit, you'll walk away with expert advice and confidence in your technology decisions. Check us out at remedyconsult.net or give us a call at 262-955-7776. Thanks for tuning in, and now let's get back to the episode.
Yeah, I would say in the banking as a service space, and I'll speak specifically from our perspective.
Yep.
We are seeing a trend of existing bank of records rethinking their technology strategy. I think for a long time you saw a bank of records, or these issuing banks, with a number of different infrastructure providers that they used. And I think what folks are learning, seeing a lot of the regulatory activity that happened in 2024, is that middleware just isn't cutting it. They need a foundation where they can be confident that that company is still going to be around 5 years from now, and they can be confident that they're going to be able to stand up to an auditor and say, I did every single thing I was supposed to, and I can show you anything that you want to see across the base. And as such, we have seen a huge surge of demand from existing bank of records who were previously on a middleware, but now want to get serious about their banking as a service business. So I think that's one big trend. I think a second trend, it's correlated with that. In between 2017 and let's call it 2023, every fintech deal that we signed, we found, right? We hunted the fintech deal, we built the conversation, we helped them understand how they could build a business, and then we matched them with a bank of record. In 24, and especially in 25, what we're starting to see is fintechs going first to the bank and saying, hey, I'd like to get married. And then the bank saying, okay, my recommended technology platform is Helix. And so this new paradigm of how you choose your partners in this space will have long-term effects on both the go-to-market for infrastructure providers, but also the go-to-market for banks, where banks are starting to realize, hold on, maybe it's worth hiring 1 to 2 salespeople to go handle this kind of thing because I'm starting to get inbound that I've never gotten in my life. And then the third theme that I would lay out from a banking as a service perspective is the push away from standard. And what I mean by that is, look, in 2017, 2018, it was good enough if you were a company to just launch banking services, right? And it was like, hey, I'm going to do what they did, but without charging you anything. And it was novel, right? Because you had never seen banking in those types of contexts. Well, we're 7 years from that time, and that's not good enough anymore. What is going to make a successful embedded finance or banking as a service play is one of two things. Either you need to be better at the economics and distribution of the product, or you need to offer differentiated functionality that nobody else can do. So let's do one quick example for each one, right? Let's say that you are a grocery store, right? And your customers come in every week, no matter what, right? You have a distribution advantage. You might have 40 million customers that you can go distribute to. And so you have to focus on, how do I get the economic profile to be in a really good spot? And how do I maximize on my distribution without doing the things that I'm not so good at? On the flip side, if you do not have 40 million customers, but you want to be able to go and start a successful business, you can no longer just add banking products. You have to think about, how do I incorporate the banking workflow into what I do already to make it more successful? So I'll give a quick example of insurance companies. Let's say today your house floods. What is that process with your home insurance company? Well, you're going to go through this horrible approval process, and a couple weeks later, they're going to send you a check. That check's going to take a week and a half to arrive. Eventually, you're going to cash that check. You've had to, for 3.5 weeks, figure out how to float your life, but eventually you will go and spend that money to go replace the stuff that was destroyed.
Yeah.
And that all culminates in what's called a loss ratio for the insurance company, right? They want to minimize how much they take in losses. And everyone is focused on, how do I get that loss ratio as low as possible? Well, what if instead you went through an online flow that happened over the course of 2 days, and then they just instantly created a card on your phone where you could go buy the things that you needed from Home Depot, from IKEA, from wherever it is that you go? Well, for you as the customer, that 3.5 cycle just became 3 days, and that makes a huge difference in terms of your ability to survive. But from an insurance perspective, not only have you offered that better product, now you are earning 1% cash back on all of the money that you dispersed, which functionally is the same as lowering that loss ratio by 1%, right? So if I gave $100, but I got $1 back, it's similar to just giving you $99. And so this is an interesting use case where I'm giving value to the customer. They're getting their stuff 3 weeks early, and I'm getting a ton of value back of lowering my most important metric. And the reason I bring up cases like this is because for a banking as a service or embedded finance strategy to be long-standing inside of a company, it must bolster your core product. It can't be this add-on off to the side, right? And so I think what you're going to see over the next 5 years is companies creating these new types of value, new types of use cases that also grow their core product, and that being the successful flywheel that drives BaaS growth.
Yeah. That's interesting to hear. What about, data or numbers that you might have with the amount of digital banks and virtual banks that have kind of maybe come up recently? As deposits shrank, there were some FIs and fintechs looking to start a digital or virtual type branch to help build those type of deposits. Do you have any data or any insight there?
Yeah, I think one of the most fascinating statistics in 2024, 47%, if I recall correctly, of net new accounts were opened by digital banks or fintechs.
Okay.
That's a huge amount. And that is with the number of digital bank charters that were created in 2024 being sub 10, right? What does that tell you? It tells you that as consumers' digital expectations start to change, and as the quality of your product, the quality of your onboarding, your economic profile, and what you can give back to the user become increasingly important. You may have, as a bank or credit union, you may have a certain subset of customers today, but if you want to grow that population, you're going to need to enhance your digital presence. And that might be through a digital brand, that might be through reimagining part of your existing stack, that might be through banking as a service, that might be through M&A. But if you don't, that spigot turns off. And that deposit growth turns off because there's a finite amount of deposits that you can get out of one underlying customer. And so that's what we point people to when we start to think about, okay, well, why is core modernization important? Why are banking as a service strategies important? Why is a digital brand strategy worthwhile considering? It's to capture the water that's coming through that spigot that is not going your way today.
Awesome. That's a great way to look at it, and it's powerful data, like you said. I guess one more question I would have is,
Sure.
what are you and what's Q2 doing of, helping, with these trends to build, a better mousetrap, for lack of a better term, it comes to with digital only banks.
It's a good question. A digital only bank is a path, but it is not the path, right? And what we have come to realize is when somebody comes to us and says, let's say, I want to launch a digital only brand, the right answer is not to say, sign here, right? The right answer is to say, well, why do you want to do that? Or like, what are you actually trying to do? And I'll tell you that maybe half the time they have a really good reason. They have thought through the thought process and they know what they're going to do. And in those cases, we say, okay, let's work through this together. We'll help you figure out how to succeed against your goals and your execution path. But half the time, they're like, well, I know I need to go digital. I put that in air quotes, right? I know that my competitors are modernizing their core, and so I got to do it. And I'll tell you right now, that is not a good reason, right? Because at the end of the day, technology is one piece of the pie, right? We can solve your technology problem. And we can also probably help you with the strategy part of the equation. But at the end of the day, the person who's going to have to do the change management within their organization, the person that's going to have to prioritize resources and decide, yes, this is a strategic priority, et cetera, is you, right? And so if you're not clear on what it is that you're solving for, if you're not clear on why it is that you're solving, let's not talk about solutions. Let's go figure out what your big problem is first, right? Because maybe that problem is one that we should solve. Maybe that problem is one that you can solve by yourself or that you should solve with somebody else. And so, Q2's mission is to build diverse communities by strengthening their financial institutions. It is not to sell more products, right? And so at the end of the day, for us, it is how do we go and actually empathize with our end customers and start with the problem, right? Start with what it is that they're trying to solve for their institution. Because look, the banking space is only going to get more competitive. It's going to be more important to be differentiated. It's going to be more important to be profitable. And it is in our and our community's best interest that all of these community banks that serve us today are defensible and can survive through that period. And so I think at the top level, our goal is how do we help you build a defensible business over the next 10 years? And if the digital brand is the right way to do that, we will help you execute it better than anyone else in the space. But if not, we'll help you find the right path towards what the right solution is, be it M&A, be it digital brand, be it BaaS, be it payments, be it commercial, right? And so truth is, it's like a choose your own adventure, but we start at the beginning.
That's awesome. Is there anything else I missed? And anything else you maybe wanted to touch upon, or anything else you think the audience would be, interested in hearing?
Oh man, well, we covered a lot of ground. I'll tell you that. One thing maybe we didn't get a chance to talk a little bit deeper about is we oftentimes get this question of, hey, I saw a lot of, cease and desist, matter requiring attention type activity in 2024. Does that mean BaaS is dead? Right? Like I can't tell you how many times I heard that in 2020, right? And I used this metaphor of a forest fire, and it sounds wild, but hang with me, right? I remember being a little kid and going to Sequoia National Park, and you go to a little park ranger's office, and they talk about the importance of forest fires. And as a kid, I did not understand it. I was like, hold on, like fires are bad. Fires burn things down, right? The park ranger pulls me aside, and he's like, actually, what happens in this forest is sometimes weeds grow or sometimes it gets overcrowded and there's only so much sunlight, right? And so for these big sequoia trees to grow, there needs to be some space. There needs to be sunlight. And what you realize at the end of the forest fire is which trees were well rooted and which ones were not. And the trees that were well rooted actually get a lot more fertilizer and air and growth, and they grow the whole forest with them. And so if we don't have a forest fire for a certain amount of time, sometimes it's our job to help create small fires so that we have a healthier overall ecosystem. And when I think about the banking as a service space, I'll be honest with you, between 2018 and 2021, there were a lot of great businesses that were started, and there were some irresponsible businesses that were started, right? And there were a lot of awesome banks that entered the space in a thoughtful manner, and there were some banks that entered the space in a not so thoughtful manner and thought of these as like aggregator easy button deposits. At the end of the day, we own the responsibility of the financial health of the economy. Banking sits at the center. And so it is critically important that what we do responsibly because we hold all of us on our own shoulders. And so to me, what happened between 2023 and 2024 was critically important. Like it brought a degree of scrutiny, it brought a degree of seriousness such that the folks that we're seeing come in now that or whether they're banks or they're fintechs that want to enter banking as a service, they know that this isn't a joke, but they know that if they do this seriously and they dedicate their strategy to it and they have the right controls and the right technology in place, that it can be wildly performant for their business. And that's where we get into the interesting part. That's where we get into, okay, well, what kinds of cool new functionality can we build? How much more value can we give back to the customer? How can I get more efficient as a bank running these types of products? And that's where the next unlock's going to be. And so I would reframe how you look at 23, 24 and say, that was a necessary catalyst for the growth to come. And I'm really excited to see what it looks like.
Awesome. Well, I just want to say thanks one more time for joining us. Really good episode. You're clearly done this a few times, and I appreciate it.
It's a fun topic and a fun company. Appreciate it, man.
Awesome. Well, thanks to everyone for joining today, the most recent episode here at BankTalk. If you have any questions or want to reach out, feel free. Otherwise, have a great day. Thanks for joining us today. Keep on learning.
Thank you for listening to the Bank Talk podcast brought to you by Remedy Consulting. To reach out and learn more about Helix, helix.q2.com. Go to helix.q2.com. Thanks again, and we will see you in the next episode.